The asset with no substitutes. Everyone talks about gold as the ultimate hedge against inflation. Everyone talks about oil as the ultimate commodity. But almost no one is talking about the only asset class with zero substitutes. Think about it. We can rebuild an economy without silver. We did it before money existed. We can run a power grid without oil. We have nuclear and solar. But take away this resource, and we have exactly 72 hours before civilization collapses. I have spent the last week auditing global resource data, from satellite aquifer scans to obscure water rights filings in the American West. I found 25 distinct signals that we are moving from an era of abundance to an era of hydrological bankruptcy. Signal number 1 is a terrifying 40% global supply deficit hitting us by 2030. But signal number 21 is the specific asset class that Michael Burry, the man who predicted the 2008 crash, is using to bet on the end of cheap water. This is the macro edit. If we want to catch these signals before the market prices them in, make sure we are subscribed to these briefings, because by the time this hits the mainstream news, the trade is already over. The invisible input. Before we get to the list, we need to understand the macro mispricing, a fundamental flaw in the current economic model. We currently treat water like air. We operate under the delusion that it is infinite and free. The market prices it at near zero. But the reality is that water is the invisible input for everything in the modern economy. Get the idea out of our heads that this is just about drinking water. We cannot train an AI model like ChatGPT without millions of gallons of cooling water. We cannot build a semiconductor chip for our iPhone or an NVIDIA GPU without ultra-pure water. We cannot frack for oil without injecting water into the ground. We are currently living in a hydroillogical cycle. The math has broken. We are depleting 10,000-year-old aquifers just to grow alfalfa in the desert to export to China. We are spending our savings account, and the balance is hitting zero. When the price of an essential asset is suppressed by politics while supply collapses, the result is always the same: a violent repricing event. Here are the 25 signals that prove the blue gold crisis is already here, broken down by the supply shock, the geopolitical choke, and the asymmetric bets. The supply shock, the visible data. These first 10 signals are the flashing red lights on the dashboard. This is the raw data showing that the tanks are running dry. 1. The 40% global deficit. The UN and World Bank recently confirmed a terrifying statistic. By 2030, global freshwater demand will outstrip supply by 40%. To put that in perspective, imagine earning $100 a month but needing $140 just to pay rent and eat. That is the world in 5 years. This isn't a future problem for our grandchildren. 2030 is less than 5 years away. A 40% gap in a commodity with inelastic demand means we can't just decide not to drink. It will mean prices don't just rise, they go vertical. 2. The Ogallala Aquifer collapse. The Ogallala Aquifer is the breadbasket of America. It supports $20 billion in agriculture annually. But most people don't know what an aquifer actually is. Think of it like a giant underground sponge made of rock and gravel. It holds water in the tiny spaces between the stones. It took nature 10,000 years to fill this sponge with water. That was the deposit. Right now, we are pumping it out to water crops faster than rain can refill it. We are squeezing the sponge dry in just 50 years. In parts of Kansas and Texas, the water table has dropped over 100 feet. Farmers are digging deeper and deeper, hitting sand. When this sponge goes dry, it doesn't refill. It's gone. And when that happens, U.S. food prices don't double. They triple. 3. The Colorado River cuts. The Colorado River is the real warning shot. The Colorado supports $1.4 trillion in economic activity. It is the lifeline for 40 million people. Recently, the water level got so low that the federal government declared Tier 2 shortage cuts. Let me explain what Tier 2 actually means in plain English. Default. The federal government effectively tore up its contracts with the states. They looked at Arizona and Nevada and said, "The water we legally promised it doesn't exist anymore. We are cut off." This is the first time in history the US government has defaulted on a resource obligation. The system is officially insolvent. 4. The AI thirst signal. We love AI, but we forget that ChatGPT drinks water, a lot of it. Data centers generate massive heat. To cool them, we use water. Training a single AI model like GPT-3 consumes 700,000 liters of clean, fresh water. To make it simple, every time we have a short conversation with a chatbot, it consumes roughly a 16-ounce bottle of water in cooling costs. As AI explodes, water demand from tech companies is projected to rival the consumption of entire nations like Denmark. 5. The semiconductor choke. The most important factory in the world is TSMC in Taiwan. They make the chips for Apple, Nvidia, and the military. Making these chips requires ultra-pure water. TSMC uses approximately 156,000 tons of it per day. During the 2021 drought, the Taiwanese government made a choice. They shut off water to farmers to keep the chip fabs running. This established the new hierarchy of the 21st century. Chips eat first, people eat second. 6. The day zero precedence. We think water running out is something that happens in movies. It's happening in major capitals. Cape Town, South Africa, nearly hit day zero in 2018, the day they would turn off the taps for millions of people. Mexico City is facing critical shortages right now. Montevideo, Uruguay, ran dry last year. These aren't remote villages, these are modern cities. The infrastructure of the 20th century was built for a stable climate, but it breaks under the volatility of the 21st. 7. Saltwater intrusion. This is a silent killer. As we pump fresh water out of aquifers near the coast, like in Florida or Vietnam, the pressure drops. When the pressure drops, saltwater from the ocean pushes inland to fill the void. Once an aquifer is salted, it is dead forever. We can't drink it, and we can't farm with it. We are permanently destroying our freshwater savings accounts. 8. The food-water nexus. We often treat food and water as separate issues. They are the same issue. Agriculture consumes 70% of all global freshwater withdrawals. We are essentially eating water. It takes 1,800 gallons to produce 1 pound of beef. When water gets scarce, food gets expensive. We are seeing a direct correlation. When drought indices go up, the global food price index follows. Water inflation is food inflation. 9. The infrastructure rot. In the US, we lose 6 billion gallons of treated drinking water per day to leaky pipes. That is enough to fill 9,000 swimming pools every single day. Our water infrastructure gets a C- grade from the engineers. Fixing this requires trillions of dollars. And since the government is broke, that cost will be passed to us in the form of significantly higher utility bills. 10. Pollution scarcity. Scarcity isn't just about how much water is there. It's about how much safe water is there. The USGS found PFAS, or forever chemicals, in 45% of US tap water. Even if we live next to a lake, if that lake is toxic, we have zero water. Available water is shrinking because safe water is shrinking. This creates a massive premium for purity. Before we move to the geopolitical signals, I want to leverage the intelligence of this audience. I look at satellite data, but you guys are the boots on the ground. If you are noticing shrinkflation in your utilities or strict watering bans in your specific city, drop a comment below with your specific location and what you are seeing. I read through the comments to build a clearer picture of the real economy, so go on record and let us know what the water situation looks like in your jurisdiction. Part 2. The geopolitical choke, the hidden levers. These next 10 signals explain the war part of the thesis. Water is no longer just a resource, it is being weaponized by superpowers. 11. The virtual water trade. This is a critical economic concept. When a Saudi Arabian company buys alfalfa land in Arizona, they aren't buying hay, they are exporting American water. It takes massive amounts of water to grow the crop. They harvest it, put it on a ship, and send it to Saudi Arabia to feed their cows. Why? Because it is illegal to grow alfalfa in Saudi Arabia. It uses too much water. So they are draining our aquifers to save theirs. This is the arbitrage of a dying resource. 12. The Nile Dam conflict. Ethiopia built a massive dam on the Nile River called the GERD. Downstream, Egypt relies on the Nile for 97% of its water supply. Without the Nile, Egypt ceases to exist. Egypt has stated that any reduction in flow is a red line for military action. We have two major militaries staring each other down over a river valve. The next regional war in Africa will be a war over water. 13. China's third pole dominance. The Tibetan Plateau is often called the third pole because it holds so much ice. It is the source of the 10 largest rivers in Asia, the Mekong, the Indus, the Yangtze. China controls this plateau. They control the headwaters. They are building mega dams upstream, giving them the ability to restrict flow to India, Vietnam, and Thailand. It is the ultimate geopolitical leverage. China can effectively turn off the tap for its neighbors. 14. Cloud seeding wars. China has expanded its Sky River weather modification program. They are firing silver iodide rockets into the sky to force rain to fall over China. But here's the problem. The atmosphere is a closed system. If we force rain to fall in China, we might be stealing that moisture from India. We are entering the era of rain theft. Imagine a diplomatic crisis because one country stole another country's clouds. 15. The Mekong drought. The Mekong River feeds Southeast Asia. Recently, fisheries in the Mekong Delta collapsed. Why? Because upstream dams, in China and Laos, held back the flow during a drought. This destroys the food security of Vietnam and Cambodia, creating a refugee crisis driven by thirst. It shows how upstream power can destroy downstream economies without firing a shot. 16. U.S. water rights legal battles. The Supreme Court is currently hearing cases between states fighting over river flows. Florida is suing Georgia. Texas is suing New Mexico. The legal framework of the West, first in time, first in right, is breaking down under scarcity. We are seeing a domestic civil war of litigation where states fight over every drop. 17. Corporate water risk audits. Wall Street is waking up. BlackRock and major funds are now forcing companies to disclose water risk. Companies like Coca-Cola, Intel, and Nestle are being audited. If a factory is located in a high-stress water zone, it is considered a risk asset. Capital is starting to flee regions that are running dry. 18. The privatization push. Municipalities are broke. They cannot afford to fix their pipes. So, they are selling their water systems to private equity firms. When water goes private, the goal shifts from public service to profit. Rates typically spike. We are seeing the financialization of the tap, where clean water becomes a luxury service. 19. The desalination energy trap. People always ask, why don't we just desalinate the ocean? The answer is energy. Desalination is essentially turning energy into water. It takes massive amounts of power to push salt water through filters. This makes water prices dependent on oil prices. As energy gets more expensive, cheap desalination becomes a myth. It sets a high floor for the price of water. 20. The toilet-to-tap pivot. California has approved direct potable reuse. This means recycling sewage wastewater, cleaning it, and pumping it directly back into the drinking supply. This signals desperation. Governments know the fresh supply is gone, so they are turning to extreme measures that were previously considered taboo. Part 3. The asymmetric bets, the profit play. These final 5 signals are the solution. How is the smart money positioning for the crisis? 21. The water-rich farmland asset class. This is the Michael Burry trade. Burry realized we can't just buy water because we can't store it. So he bought food grown in water-rich areas. He targeted almond farms with senior water rights. In a drought, the land itself is worthless, but the legal right to the water attached to that land is priceless. It is the ultimate hard asset. 22. The water futures market. In late 2020, water officially joined gold and oil on the futures market. Ticker symbol NQH20. Wall Street is now betting on the spot price of water in California. This brings liquidity, but it also confirms a dark truth. Finance now views water as a tradable commodity, not a human right. 23. The pick and shovel plays. If water is scarce, efficiency is valuable. The biggest winners won't be water utilities. They will be the companies that fix the leaks. Companies like Xylem or Lindsay make smart meters, leak detection bots, and precision irrigation systems. They are the arms dealers in the war for water. Every drop saved is money earned. 24. The blue bonds explosion. Just like green bonds for carbon, we are seeing the rise of blue bonds. These are sovereign debts issued specifically to fund water projects. The Nature Conservancy is brokering deals where countries refinance their national debt in exchange for protecting their waterways. Finance is taking over conservation. 25. The ultimate signal, the price multiplier. The final signal is the cost of water versus the cost of failure. Think about a semiconductor factory that costs $20 billion to build. If they run out of water, the factory shuts down, losing billions. Therefore, if the price of water goes up 10x, they will pay it without blinking. It is a rounding error compared to the cost of failure. This means the price ceiling for industrial water is almost infinite. The asset is mispriced, and the smart money is buying the repricing. The execution, the playbook. So, what do we do with this information? 1. Audit our geography. Do not buy a house in a zip code with a failing aquifer or junior water rights. Our property value is effectively zero without the tap running. Check the water table data before we sign the deed. 2. Invest in efficiency. The biggest ROI in the next decade will be in companies that solve the leakage problem. I'll be breaking down the balance sheets of these specific efficiency plays in a follow-up video, so make sure we're notified when that drops. Look for the industrial plumbers, the companies making the hardware that saves every drop. 3. Watch signal number 22. Keep an eye on the water futures index. When that chart breaks out, the era of cheap abundance is officially over. Water is the next oil. But unlike oil, there is no alternative. I'll see you in the next edit.